Hello from Hong Kong and welcome to this week's market update. Stocks moved sharply higher so far this week on optimism from Pfizer that its COVID-19 vaccination has an efficacy rate in excess of 90%. Stay-at-home stocks such as Netflix and Zoom moved sharply lower as we saw a rotation away from tech into value, with financials, oil and gas, and hospitality stocks up in some cases more than 20%. As the week moved on though, we saw a partial reversal of the rotation as money flowed back into tech, as more details of the vaccine and actually how complex it is to distribute emerged. The vaccine needs to be stored at minus 80 degrees Fahrenheit. Now this is troublesome, particularly for less rich nations, as they are unlikely to have the infrastructure in place to store and transport the vaccine. And even wealthier nations will likely need to improve infrastructure to ensure a quick mass rollout. Market sentiment was further dampened by news that US jobless claims increased by 709,000 last month as stimulus measures stalled and COVID cases continued to rise. The US government is deferring to the Republican-controlled Senate to agree a stimulus deal, and the two sides look further apart now than in the weeks prior to the election. If a deal gets drawn out by too long, this will make the months ahead significantly more challenging. In the UK, Prime Minister Boris Johnson's senior aide, Dominic Cummings, announced he will resign and leave before the end of the year. Cummings, with his hardline negotiating tactics, is thought to be the main friction point between the UK and the EU in Brexit negotiations. His departure makes it more probable that a deal could be agreed and could be supportive to the pound, which is currently trading at close to 132 against the US dollar, which is at the higher end of its trading range. In Asia, China cracked the whip by stalling the Ant IPO last week, and more details of a broader regulatory incursion into the tech sector caused Chinese tech to be volatile this week. Reports are that President Xi was directly to blame for stopping the Ant IPO after he was dissatisfied with Jack Ma's comments at a forum in the weeks previously. This seems to show that the Chinese Communist Party's intention is to limit the power of China's tech billionaires, giving Ma at least a reality check. Speculation on what forms of control will be placed on the tech giants Alibaba, Tencent, and JD.com include the CCP taking stakes in all of the businesses. One thing that looks certain though is that if the Ant IPO does resume at some point, the valuation is likely to be significantly lower. Finally for this week, as we approach the end of a very interesting year, sentiment will likely continue to chop and change. But our view at this stage is that 2021 will be broadly positive, as we see a gradual reopening thanks to a vaccine rollout. Add to that supportive central bank policies, keeping interest rates at 0% and a continuation of quantitative easing, meaning money supply will keep markets flush with liquidity. Any of us that have been lucky enough to stay employed during this period will likely be wealthier than prior to the pandemic. And when that spending power is released, an economic rebound will occur at pace. That's all for this week's market update, and I'll see you all again next week.